Hello guys, it's Nikki, you also known as Faces Reader, and you are watching the Awesome TEDx channel. It's August 6, 2020, and you are watching the Global Markets Live. So let's talk about what's happening in the market. So I think the biggest news that I have to discuss is the connected TV. That secular trend is huge, and the earnings has come out for your Disney, for your Roku, and a lot of people are asking, well, what do you think about it? So let's read some news first before my opinions. So Roku, prior to earnings, was trading already at 165. That tells you that people are bullish with this $20 billion company. Did it beat? And is it gonna go higher? But the after hours of Roku is, I think, 157. Let's take a look at the news first. So let's read first. So the streaming video platform Roku has benefited from a surge in usage during the coronavirus pandemic. And Roku said that they lost 35 cents a share on sales of $356 million. Analysts expected that Roku was going to lose 50 cents on shares of on sales of 315. So this is actually a beat for Roku. Now, Roku is investing heavily in international expansion. We know that Roku is in Brazil, in Canada, in Mexico, and the UK. Roku has been heavily supported the OTT. That is the big video on demand trend. Its advertising supported video on demand services has been growing well. The company didn't give the guidance for the second half of the year because of the COVID pandemic. And so Roku has been moving up and down, whether it's the regular session, it was 165, and I'm not sure after ours if it was 157, but we will go to the charts later on. Let's take a look first on what's really happening. Roku added 3.2 million accounts, now reaching 43 million in its second quarter. On a year-over-year basis, the number of Roku subscribers are now up 41%. Now, average revenue has climbed up 18%, $25, and the company's platform saw the revenues increase 46% year over year to $245 million in the June ending quarter. So the business model has been take a revenue cut from the advertising for subscription video on demand and movie rentals. Also, Roku takes a small revenue from hardware selling set-top boxes to access the video platform. The player revenue business rose 35% to $100 million in the second quarter. So Roku has already benefited more than 100% increase from its March lows of $58. It had been reaching about a 11-month high of $170. So prior to this earnings, a lot of people have been bullish in Roku. And so for the shareholders of Roku, those numbers look good. I would say that anyone who would short-term sell is a take profit on the short term, but is not looking at the long term. If you have a business growing 40% and is less likely to have a difficulty in the next 6 years, whether there's COVID or no COVID time, I'd say that the bullishness for me is intact. And so I would continue to hold my Roku, and I would buy for the people who'd like to sell their Roku shares. I'd buy it near 140, 130 if there is an entry point. So I am not scared at all. Thank you for that earnings report. And my suggestion is to keep on holding your winners. Now, should I profit take? Should I add on my winners on Roku? I'd say that it's not like a 100% growth. And I'm pretty sure that we could find many winners. So I would hold on to it. I am not like spectacular now, wow, I want to buy more, but I won't sell either. Okay, so that is me for my Roku stance. Now, Disney, let's take a look at Disney. Disney, of course, reported, let's read their earnings. Their earnings was last night, $30 to watch Mulan Disney Plus. And let's read everything that Disney was saying, no? So Disney is trying to control the narrative. For all of you, you know that Disney has been a laggard for this entire year. It's been a laggard for the entire 5 years. So Disney has done nothing from 120 to $100. went a breakout last year with Disney Streaming Plus trading at 150, only to fall during the COVID pandemic back to its 5-year support of 90 and 100. And now it's just here at the middle of the pack at 130. So for the last 6 years, Disney has done nothing while Netflix has been moving strongly. Take a look first. Don't tell me that I have opinions that are not valid. Let me tell you the price shares. In the last 2015 to 2020, if you invested in Netflix 100 to 500 times 5 year money, but Disney has done nothing. Disney went from 100 to 127. So I can agree why people in Disney shares are saying that Disney is one of the most undervalued IPs around. Let's take a look at the value play of Disney. Disney looks even more like a streaming growth story with surprise moves. Disney's unexpected announcement has cheered Wall Street up. First, Disney's video streaming challenge to Netflix has been going well. Disney also announced that Mulan will go straight to Disney Plus as a one-time premium offering, bypassing movie theaters. We know that Disney's Mulan cannot play in movies because of COVID pandemic, and they decided, why not? Let's just try to offer this to all of the people who wants to buy and watch Mulan. Let's pay it at the $29.99 top up. So let's let's read it first. What Disney said. This is what Disney said. The Dow Jones Media and Entertainment giant plans to roll out a new star-branded streaming service internationally in 2021, tapping content from ABC, Fox, FX, Freeform, 20th Century Studios, Searchlight, other Disney-owned assets. An analyst said that Disney needed to use Mulan to add original content to Disney Plus, given theater shutdowns, but had anticipated a straight-to-SVOD. This is subscription video on demand pay-per-view release. It's not a premium video on demand. So it's a subscription video. After the COVID delay to its theatrical release, Mulan will now premiere on September 4, priced at $30, which itself costs $7 per month or $70 per year. So this announcement is more of a surprise because, of course, never did people thought that Disney will make a hike on their potential profitability on streaming. So this is a surprise on the upside. That's why Disney went as high as 9% last night. It's actually a buy rating for me. Coronavirus impact hammered Disney's revenue growth 42%, but we see a Netflix-like opportunity in Disney in the long term. Disney's buoyancy can be traced to the long-term value creation, much like a direct-to-consumer attack with Netflix before them. And also, Netflix stock is $500 per share. Netflix enterprise value is too low. Again, I said Netflix went from 100 to 500. Disney, can it be a $500 name? And I think most people say, okay, if you're not going to go $500, I still think that Disney should go $200. Do you agree or do you disagree? My answer is, I think the upside is bigger than the downside. So if you're buying tonight at 128, it's a buy for Awesome 10X, okay? It's a buy. Guggenheim is saying that the global streaming video opportunities is going to leverage the Star Disney assets in a PVOD window. He describes this bundle breakout as an additional charge, and Netflix never used this premium on-demand window strategy. So it tells you that Disney is now even more aggressively positioning itself as a streaming growth story and eventually a recovery play for COVID when the theme parks open. So with all these potential blockbuster upsides, Disney can potentially get an upgrade. So Credit Suisse and Guggenheim already raised the target price 146, 140, 135. And I think there's more upside that people are not pricing into Disney. It could be a grind higher, anticipating those movies that people would pay. Now, the question I have for you guys is, will you pay $30 to watch Mulan? Because at the end of the day, it's you who will dictate the answer here. Some people are saying that I don't have even money to pay for my monthly $7 a year, $7 a month. So why would I spend additional $30? So I don't know. Is the consumer of America truly hurting that they cannot afford a Disney entertainment for $30 for a Mulan? So some people told me, well, if it used to cost them $40, even if they went to the movie theaters, if they were a family of 4 or 5, and I'm pretty sure that Disney is trying to attempt that if you are going to watch movies like Mulan, Why don't I just tell you to watch it online and you can watch your Mulan? So I am at a point where I would say that between Disney, Netflix, and Roku, where will Nikki put her money? It's Disney. Okay? It's Disney. Okay, I say it's Disney. Put your money in Disney and forget about the next 3 years. Because I think that in the next 3 years, Disney is a good money to be making from. Okay, there will be more companies that we will discuss, but I've talked enough. Hindi, sorry, joke. Let me give you another stock, okay? Wait up. Um, let's see. So we've been making money in the following. I won't reveal everything to you, of course, or else who's gonna pay for my paid subscription service? But again, there's a lot of good news, no? So Match Group, apparently during the COVID pandemic, people were still paying to date online. This is your Match Group. So this is the owner of Tinder, and Tinder has done nothing but just great money for the people who've invested in them. Take a look. Match Group went from $20 to 120. You'd have 6x your money. 6x your money. And the reason is simple. Match Group, who owns Tinder, continues to get profits and profits and profits. So let's take a look at the earnings that Match Group said. Some of the best companies that continue to churn out money has been online video dating, no? Online dating. So Match Group said video dating. So we've been saying secular trend. There's this whole video streaming platform. If I'm pretty, I don't need to just put my picture there. I could actually put my face and talk every single day and stuff. So okay, I'm not even talking. What I'm saying is that the pretty guys and the pretty girls can just swipe right, swipe left, and be a video company live streaming themselves when they want to date somebody. So here's the thing. People do want to meet others and they'll pay just to meet those potential strangers for a date. Sorry, not potential strangers. Those strangers to be a potential hook, potential love of their lives. So let me read it for you. People are, it's impossible today to meet somebody online, but video and chatting and dating, it's all the next best thing. So Match Group CFO Gary Swindler said, video has always been considered a great tool for people to date as it offers a superior first introduction versus going out. So adoption is pretty slow until the outbreak gave people little to no other choice. So I think it's working out very well. People are thinking that, hey, I'd use this even after the pandemic passes. Match Group, of course, owns multiple dating apps, Plenty of Fish, Tinder, OkCupid. It's been performing very well. The momentum has grown and we are very optimistic. And so Match Group rose another 12% to $120, an all-time high. So with an all-time high like this, to me, okay, I will reveal to you a topic that is close to my heart. If you love Tinder, would you buy the Chinese and the Indian Tinder, which is Momo? Momo owns Tantan. For those who aren't aware, Momo is a way for you to meet online. But you have to be Chinese or an Indian to use these apps because of course for Filipinos, Filipinos are using Tinder as well. So that's Match Group. Either way, I think the business of love is a big potential. And for the last 5 years, Momo has done nothing from $10 to $50, went down back to about $19, $20. Can it be a $40, $50 company? My sense, and this is my speculation, the answer is yes. But you could actually learn more. We discussed Momo in our Awesome 10X classes. Am I of the belief that Momo will grow? I know that China's regulation, that is the huge, huge problem in Momo. China and India, this is a country that likes to ban things up, down, up, down. TikTok is banned in India, and then you never know, TikTok might ban India might ban Momo's Tantan as well. So that's the problem with these countries who likes to interfere with a great company. The company is great, and I think that there is more upside with these companies than the downside. So again, let's finish this now. You learned something from me. Disney is good. Momo could be good. So that's it. Thank you very much. I can't reveal everything for you. If you want to know more, just subscribe to Awesome 10X channel, and we offer you some Awesome 10X ideas. And we're happy to say that our clients are making money. So it's really worth that subscription fee of just $40 or 2,000 pesos a month. You get access to some great insights and great research to help you make money for your global markets. Thank you very much. Bye-bye.